Traders, welcome back to our price action trading lesson. We're going to use pure price action rules to help us identify directional bias of the market and where are the high probability setups. So the structure analysis is very straightforward. We pretty much have uptrend from the beginning of the session. This is the beginning of the session. We have consolidation, but prices quickly spiked up. We entered a spike and a channel pattern. So the bias is very straightforward. We have clean uptrend, spike and a channel pattern. So I'm looking for these key entry points. And as a price action trader, my goal right now only is to look for long opportunities, preferably the two-legged pullback at the EMA, because market moves in pairs of twos as that's the high probability setup. See what's going to happen. But market is stronger than expected. We have a breaking new high on just first entry long. And because prices keep going higher, and we can see tiny pullbacks, EMA rejections, there is additional channel in play. Simply because the trend remains very strong. You can see how consistent the trend is. A lot of small bars, just slowly but surely working hard. This is the strongest type of trend. Never think about selling. Focus only on the bullish structure and wait for prices to pull back to the EMA. But now I want to identify the good uptrend. So I'm going to try selecting something like this. You don't have to be perfect, but you have to be close. Simply additional spike and a channel pattern because the market remains too strong. Once you can see first entry is working, and you can't even touch the EMA, the trend is very strong, so there has to be additional pattern. Can I get a second entry long? I cannot. Count reset. New high first entry long. I have a second entry long here, but of course, you're so far from the EMA right into these highs. You really want to see something close to the EMA, so this is not good. Market is correcting. And now we're finally confirming the EMA. I can draw small support. And what's going through my mind is potential long opportunity at the bottom of the small trend range. Buying at the bottom would be ideal, so I don't have to buy at the very top of the move, although strong trends require you to be a little bit more aggressive. We have new high. Had there been a trigger here on this bar, you can consider triple test, one bounce, second bounce, third bounce. This actually would be great, simply because you can tell how strong the uptrend is. We need to get new high. We're reading the price action, we are at the support, but there was no break above this bullish bar. So there ended up being no trigger, which means we can't really take it. You need to have the trigger. You cannot simply break the rules and hope there's going to be trigger, because you can never predict if there's going to be the additional push down. Follow the rules and you're going to be rewarded. Initially we broke here, but now we have inside bar. Had there been some mini high or low, something better, but it got a little bit stacked with an inside bar. It's a shame, but this is what strong trends can do. Just weak setups working. We have breaking new high. But prices keep working hard and we keep working hard. Now, when I'm watching this, the break for my liking is still minimal. The trend very well can still be in play. It looks so seamless. It still looks like one clean push. So when I'm watching this, I like drawing even additional channel like this because it fits a lot of confirmations and the trend structure is still intact. And you can see how strong the trend is. So the trend is quite reliable. However, we have small overshoot. So I'm going to redraw the short-term downtrend. We have a mini second entry long, but I can't take it. We're below EMA. It's a bad bar. We had overshoot. And this is the secondary channel. Actually, this is the third channel. First spike in a channel. Now the secondary. So this is the third channel. So I cannot be super aggressive since I'm widening a little bit too much. So I'm going to redraw the downtrend. We're below EMA. Not a good bar. We have overshoot and it's the third channel, so I gotta be a little bit more careful. We have a break. Of course, I cannot buy below EMA. If I'm thinking about new high, I want to see push above. That's the confirmation that the buyers are back in the market. This is important. I cannot predict how many pushes lower there's going to be. So market is correcting. We have break and push to new extreme. So I'm going to mark break, new low. I'm going to get ready here. Now, high-low confirmation setup would be decent, but there was no trigger again. You can see the signal bar didn't get a trigger. Now, I would prefer more felt second entry short because this high-low is quite closing on its high. It's not confirming much. It's confirming only the context. You need new high, which is not a bad case. But, it's not the strongest one, but a decent setup because the trend is strong. Can I get a felt second entry short? Well, yes, but the signal bar is bad and you have to use double bar entry, which is not ideal the way it formed. The stop loss has to go all the way down here. If you have some cleaner felt second entry short, you can consider. But if this is your thought process, you're doing well because you're putting all the pieces together. You're reading the candles and they're telling you that the uptrend is strong. Downtrend played out with the break, new extreme, so the sellers are weak. Push above EMA indicating resumption, and overall uptrend is new high, so there is bullish bias present. It worked for a small scalp, but we can't really take it. I mean, you can make a case for making it a little bit more aggressive, dropping some limit order. I can mark it, but simply, unfortunately, the signal bar is not the best. We spike down, but my analysis remains the same. I'm not giving up on long. This was a very, very strong uptrend. So what I want to do is I want to right now draw mini consolidation, because right now there is some support. The buyers are buying at this price level. Downtrend break, another new extreme attempt. Now, had there been decent second entry long, once again, no trigger again, it's a shame, no trigger, no break above this bar. Had there been break, you can actually consider going long because you're buying at the bottom where the correction phase will end. It is against the common sense, but I'm going to zoom out. This is how trading works, okay? We used the structure and the EMA supportive indicator to predict where the correction phase may end. And it goes against common sense because every single time we see market correcting, it's a little bit nerve-wracking to be buying at the bottom here, buying at the bottom here, but you simply have to trust price action rules. There's no other way around it, but we can't really go long because there was no trigger. If you want to be safe, you wait for the push above EMA. That's the resumption. That's the confirmation. Market's giving you more information, can get a high-low, and we have high-low confirmation setup of the second entry long, uptrend is new high, triple bottom. This is great. Hyper out this setup, great signal bar right at the EMA. Very nice setup, fits the rules, uptrend is new high, downtrend played out, support held, everything aligns, uptrend is in play. The risk is only 1.5 points. The ATR was super low, so you may consider smaller scalp, only 6 ticks. You get a felt second entry short, but it's so far from the EMA, not even the tail touching it. You can't buy at the top, too aggressive. Sort of another high-low confirmation setup, perhaps, but not at the EMA. Not ideal. Mini second entry long would be okay, but uptrend played out with the break and push to new extreme. Okay, so perfect price action. Look at the runner you would have had. So I want to redraw additional channel simply because this leg to new high was very strong, and it's quite common when the trend is very strong to begin with. The leg that creates the new high can also get some continuation, okay? And by the way, when you're trading strong trends, it's definitely common for there to be many wider channels developing because the market is so strong, it just keeps going. So I'm not even thinking about fading, not even thinking about selling. There can be continuation. This is massive spike up. We have a second entry long here, new high, first entry long, second entry long triggered here. You have to use double bar entry, which is too big. I don't like it as much because we just had a new high for the main channel. I mean, it formed quite sketchy. You have to go long here. Maybe you have much better bar, but I would prefer to get high-low. Market keeps going higher and we keep going higher. Okay, so now the structure is looking really bullish. And especially if I'm going to look at supportive chart, 10,000 tick chart, it looks too bullish. So I like drawing some additional channel like this, spike on a channel like this, because we keep working higher. It's gaining some momentum. I don't feel we're going to reverse here. It's just simply too bullish. I want to follow the trend. So I'm just going to observe how EMA reacts. We're breaking below, but I can still follow the downtrend. There's no setup new high, first entry long, second entry long below EMA. I cannot take. We have a break, push to new extreme. You have a lowest low where I'm going to reset the count. Okay, I always reset the count at each new low if I want to count for short entries to fail. First entry short, push above EMA. Can I get a felt second entry short? I have a felt second entry short here, but of course, inside bar, not the EMA. So I can't take it. In a situation like this, when the felt second entry short forms so bad. Actually, by the way, you have mini felt second entry short here. First entry short, second entry short failure. I sometimes skip these insignificant counts because you basically have to count it visual because this is such an insignificant pullback. You definitely can't go long here. But inside bar, not the EMA, you can see the floating gap, so you can't go long. But once you see this, downtrend played out, push above EMA is indicating resumption of the bullish push phase. You are considering second entry long. We have a new high, first entry long, pullback, second entry long. A lot of room to scalp out before reaching these highs. And this is not even significant high, so this is second entry long, and this is great. Hyper out this setup. It's sort of like a continuation of the felt second entry short. You can see new low, first entry short, pullback, second entry short. The sellers are getting trapped. Sellers are getting trapped. Big bullish bar. EMA holding a lot. We're going to go higher. Trend is up. Great setup. I'm going to redraw the downtrend working lower. Something like this. Correction. Break. New extreme attempt. And another second entry long. Another second entry long, which we pretty much have to take it. Second entry long at the EMA. There was the new low attempt. Right here. It failed. Closing high. Brand new push phase is about to start. Market worked higher, new high. I'm gonna reset the count. First entry long, second entry long below EMA, but I have downtrend in play. I don't want to take it. I have a downtrend in play. Yes, I have overshoot, but I need some stronger push above EMA. We have one tap, double tap, triple tap. M2 here, we're kind of rolling over, but it is very minor, insignificant nuance. But the downtrend is the main pattern here. You have to be careful because we can create a new extreme. So I can't go long yet. I need to see push above EMA for prices to free themselves out of this downtrend. Downtrend played out with the break new extreme. I'm going to redraw consolidation. Why? Because EMA is flattening. Consistent pricing up and down. Uptrend is new high. So I'm not thinking about selling. We're pushing above EMA. So I'm thinking about second entry long. Can I get a second entry long? No, we're back below EMA. That's not ideal, but I'm still thinking more bullish. Push higher. Inside bar, I can't take it. Flat EMA. No setup here. It's getting way too wedgy. You know, this is really a slow, choppy price action. I can't consider taking anything. It's getting way too late. And market actually ended up trading lower and it's about to close. So this is the overall structure for today. Pretty straightforward price action using the price action rules. It was all up, spike and a channel pattern. Never looked bearish. You're just waiting and letting the correction play out. And once the correction is over, you're trying to go long as soon as prices push back above the exponential moving average. You can make a case for this one being a little bit more aggressive, but there are a couple of decent high probability setups. And it's a shame we didn't get a trigger here. This would have been a great entry. Either way, I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.